The markets have dropped really hard. Is it time to buy the dip? Are they just going to continue to fall? What do you do? This is where most people struggle. We all know we should buy the dip, but no one ever does because it's scary, it's hard, and people have a lot of question marks about what's about to happen. Well, let me help you walk through this scenario in the market this week. What's going on? My name is Tony with Real Life Trading. I am a full-time trader, and my goal is to help you see more profits in your trading. So let's dive into my game plan for this week of how I'm going to navigate this dip. Am I buying? What levels am I looking at? How do I know I'm wrong? So that you can have a better idea of what to do in these markets. Let's start with SPY. So SPY has played its way up into a very large resistance area. This is where we exited all of our calls for a reason. It's at the top side of this channel, which normally means selling. So now we are into the start of my buying zone. This area is where I believe the bulls should be at. Whenever the stock gives me a perfect S curve, that tells me odds are the bulls are going to step in and buy the dip. Nothing is perfect. Nothing is 100%. The probabilities that I'm looking at are about 65% chance that the dip is going to get bought up based on the previous price action movements. So that answers my question of should I buy the dip? In my opinion, yes, in this scenario. I'm not going heavy. I'm not going to be crazy aggressive. This isn't the greatest buy in the entire world, but I do believe it's going to get bought up. So now the second question is, where do we start? The way I approach my trading is to eliminate the idea of having to be perfect. So I like to leg in. That gives me room in case it continues to go lower after I buy it. And it also allows me to catch bounces if it doesn't make it all the way down to like my ideal buying spot. So on Friday, I bought my first leg in here with some SPY calls that expire out in January. It gives me plenty of time for the markets to kind of mess around for a few more weeks, and I can still take advantage of the bounces if they come. So I am in my first leg here, and the whole reason behind it was I've got a strong support sitting here. It's very extended with lots of bear days into the 20 EMA and the 20 SMA, which is this dotted line right here. We've got large put walls expiring this Friday right in this area. Now, I use options a lot. I'm a big time options trader. That's the main instrument that I use to trade and make money in these markets. I love options. It gives me an ideal risk reward scenario. I can easily control my risk, and I have a huge upside with these options. If you want to learn a little bit more about options, come join us in the lifetime membership package here at Real Life Trading. It's just $25. It's the first link in the description down below. Once you're in that community, just send me a message and I will send you hours worth of options videos and courses to show you exactly how to do this completely for free. Again, it's the first link in the description below. So these large put walls, it's just simply a large amount of people currently in puts. The markets are going to try their best not to pay people out. So if everybody's in short, they're going to try to keep the markets up. If everybody's in long, they're usually going to pull the rug out, just like up here. Everybody, record amount of people jumped in long, it's pulling the rug out. The idea is get away from the crowd, right? 90% of the people are going to lose in the stock market. So simply don't be on the side of the 90%. Be on the side of the 10%. Get in here when everyone's going short and get out here when everyone's going long. That's the game. So we've got a lot of people in short in these markets, and these are the levels that they are in short at with these puts. So we have 585, 580, and 575. These levels should act as pretty decent support levels for me. So this is the spot where I'm going to be legging in to my position. So first one hit, first entry in. Second one hit around 580. This is what I'm planning on doing, is buying a little bit more. And then down around the 50 EMA on a daily, right around 575 would probably be about my last spot to enter in. That would bring me my full size. Once I'm in my full size, I want to see some bulls stepping through. I want to see a decent bounce, and my target is going to be back into a new all-time high around 605 to 615. Somewhere in that area makes a lot of sense. How do you know you're wrong? This is where people get scared. Tony, what if it keeps going lower? What if, I lose on this trade? How do I know if it's going to work? You don't know. The only thing that you do know is how much money you're going to lose when you're wrong. That's your risk. Stock market is all about these uncertainties, and that brings in so many emotions and fear. What you need to do is you need to wrap your mind around what you can control, and that will quiet those emotions, quiet the fears, and allow you to start thinking logically in the markets. My stops are going to be right underneath this 568 level. If we are not bouncing by 568, something is up. We'll probably give something like this, and now we're setting up for a head and shoulder pattern. So if that happens, it's time to exit all of my calls back through here for a small win, and then rotate on over, right? So I have a small amount here, largest size here. So by the time it gets up to about my original first entry spot, I'll be break even to somewhat profitable. That'd be my time to get out. And that's only if we start working our way back down into this 585. If we hit 575 and rampage, cool, I'll hold and just watch the price action from there and see what happens. But any move back down through here is my first warning sign that the bulls did not step in. Like right through here, this is where these bulls should be. So if they are not, that is your warning sign. I don't need the markets to drop off a cliff to realize that the bulls are not strong. I can get my sentiment reads through what happens in these should buy areas. Now, if it rampages without me, let's say I get out of it here and it takes off. Oh well. Again, stop trying to be perfect. I am looking for the bulls to step in strong. If they don't, I cut my risk and I wait for the next opportunity where the bulls can show me their strength or not. I don't care if I get missed because I'm here to protect my downside, right? Professional traders focus on how much money they're going to lose. Everyone else is worried about how much money they're going to make. My money will come. I'm going to make my money. The thing that's going to separate me from everyone else is how much money am I going to lose when I'm wrong. So this area down through here, the combination of support and resistances, price action, and option levels are going to give me a really good idea of what should happen on this dip. And if what should happens doesn't and it starts to fall, I now have a pretty good idea of how strong these bulls really are. Not very. So any bull move back up through here, this is a chance to go short, not the chance to buy. And this is where people get so stuck in the markets because they don't understand how to read this. That's my game plan on SPY. I expect this market, again, 65% chance for it to make a new high off of this dip. And if it doesn't, we've got a solid game plan to play with. On the Qs, we have a large put strike here at 485 on the Qs, and we are getting ready to break this up channel right now, which would not be very strong for the bulls. At the moment, it is holding, so let's see if they continue to hold. But here's another issue. We've got some large call strikes sitting at 501 on the Q. So if we can get up above 501, this should have a very strong bull momentum move. And there's also, the previous all-time high, that resistance here. So if we can break up above that, fill the gap, close strong, we should be on our way, pushing into 530 or so on the Q. Again, my line in the sand is going to be sitting right around that 485 mark. If the bulls are closing below 485, that is my warning signal. Bounces are now shortable, not buyable. Exit longs, and it's most likely rotating down. So this is a very crucial area for the bulls to hold. If the bulls are not holding this level, now we'll know, okay, we made a new all-time high. We've got an island reversal out here. Things could be looking a little bit shaky. Want to be aware of that, but it's too soon to predict. Let the chart show you what they're wanting to do. If we bounce strong, new all-time high. If this thing starts to struggle down below 485, first warning sign, it's going to bounce. After that, it's time to go short for a rotation back under. And the last ticker that we're going to hit on is we are getting a pretty decent gap down through the 20 EMA. And this is a little bit concerning because what we want to see as bulls are higher highs and higher lows. Well, we're getting the higher high. We haven't failed the higher low yet. But in my opinion, around the 20 EMA on a daily is a great place for the higher low to come in if the bulls are extremely strong. Well, we're gapping that and we're on our way down. So if we start to visit some of these lows down through here, that might be a warning sign that further pullbacks are going to come. Now, we have earnings coming around the corner on Nvda, and going into earnings, going into any big news event, the markets like to work their way into a key level, a very important spot, kind of like a make or break. And for me, that would be this bottom part of this channel. I could easily see Nvidia going into earnings sitting right on top of this channel. A gap down ruins the party. A gap up is where the buyers step in. Well, my friends, I hope you enjoyed this recap of the markets this week. Very interesting times. It's going to be fun to see how they play out, where they want to go. Put alerts on your charts, mark out those key levels that we discussed, have a game plan, control your risk, and then most importantly, let it work. Accept the loss. Be okay to lose your risk. Control that number. Don't let it lose more. Follow your plan. And then the second part is when this thing works, let it work and let it win. Come check us out at Real Life Trading. We are a trading education company. We teach you how to trade. It's not about following the gurus, it's about turning you into the guru, about showing you how to take control of your life, your finances, and giving you control of your future instead of relying on someone else. So come check us out. Again, it's the first link in the description down below. Hope you guys have a great week. Follow your plan and go change your life.